Hello everyone, welcome to the Ichimoku daily analysis for gold for Thursday, March the 25th, 2010. Well, the previous day we had a close outside of the bottom of the cloud, which was a fairly bearish close. The bears were in control of the market, although it was only a moderate amount of control, but it was still enough control for there to be potential for this market to move lower. The only problem with that is that we have a very large, well-defined zone of support below where the market was trading. And that's one thing that we do need to keep in mind when we're looking at using Ichimoku indicators and our Ichimoku trading system. And it's that when we have breakouts above or below, or we get trading signals from the indicators, we really do need to look at other factors, and we shouldn't forget our other technical analysis. And defining support and resistance areas is a very important part of what we do as technical analysts. And we can see here that we have this large zone from 1080 down to 1066, and then this very strong upside price rejection from 1045. So we have a very big area of support. Now, any signal that's taken with a Kumo breakout to the downside certainly should be looked at in the context of this strong support below, and it certainly isn't a trade that one would be rushing to take, because the market can hold up here and find support anywhere within this region. So we do need to think about how we apply Ichimoku charts. Having said that, we do have an inside day in bar chart terms, and the market is now closed up towards the high, which means that the bears have actually lost control of the market and the bulls have taken control. We do have a small shadow on the top of this candle, and by the way, it's a green candle, which means that the buyers have made some net bullish progress on the day. And that shadow on the top of the body of the candle represents some downside price rejection. It represents the sellers coming in as the market found resistance at the bottom of the cloud here. So when the cloud was previously acting as support for the market when we're trading within this region, now it's acting as resistance, and that can happen with the cloud or the Kumo. The bar, it is a bar, an inside day, and that does raise some doubt about the continuation of the trend in the first time frame to the downside. And that's simply because we no longer have the series of lower highs and lower lows. We actually have a higher high, a lower high, but a higher low, which raises doubt about that. And we do need confirmation of any change of trend, so the high of the current candle becomes important. The market will potentially find resistance anywhere through the cloud if it does trade to the upside, so there is potential resistance from 1094 all the way up here to 1119. Also, there is potential resistance offered by the Tenkan-sen, the green line here, or the Kijun-sen, the pink line, and they've turned flat. When they turn flat, it actually tends to be an attractor of price action, so there is a strong possibility that the market will be attracted back up towards those levels. So we do need to watch that, but there is a potential for a strong move up there, albeit only a fairly small move in the big scheme of things. So not really a trader's market here. We have the overall a slightly negative bias, more of a neutral bias to this market, and slightly negative in the medium and short-term time frames, but strong support down below, strong resistance above. Not a good market to trade.